Welcome back, traders. Happy to have you here today. In this short video, I will show you my 100 times back-tested result in a roll on the USD Japanese yen with the 50 EMA plus RSI hidden divergence plus Fibonacci retracement strategy for day trading on the 15 minutes time frame. At the end of this result, we would see the effectiveness of the 50 EMA plus RSI hidden divergence plus Fibonacci retracement strategy in the market. I've taught you how the 50 EMA plus RSI hidden divergence plus Fibonacci retracement strategy helps to detect trade opportunities in the market. Therefore, I won't spend much time explaining how these indicators function in this video. If you need to refresh your knowledge about how these indicators work, you can check on the link I left in the description of this video. In order to increase our winning probabilities, it's advisable we implement this trading strategy to trade accordingly to the direction of the Dominion trend. As we can see on this chart here, the trend was in a strong bullish rally. To buy in this type of bullish trend with this trading strategy, we need to patiently wait to see a bearish pullback to the 50 EMA indicator, as we can see here. Next is to watch out for a hidden divergence formation on the RSI indicator for the potential continuation of the bullish trend. Divergence means the opposite direction of high and low swing between the price chart and oscillator indicators. As we can see, here's the hidden bullish divergence on the RSI indicator here. The swings on the price chart was a high-low followed by a higher low. But the RSI hidden divergence gave an opposite swing of lower low on the second swing here. Next is to apply the Fibonacci tool to see if the price pulls back to the 50% or 61.8% retracement level. We can then buy after price ensures a bullish close of candlestick above the 50% or 61.8% Fibonacci retracement level. The opposite goes for the bearish setup with this trading concept. To sell in a bearish trend with this trading strategy, we need to first see a bullish pullback to the 50 EMA. Next is to watch out for a hidden divergence formation on the RSI indicator for the potential continuation of the bearish trend. As we can see, here's the hidden bearish divergence on the RSI indicator here. The swing on the price chart was a low high followed by a lower high. But the RSI hidden divergence gave an opposite swing of higher high on the second swing here. Next is to apply the Fibonacci tool to see if the price pulls back to the 50% or 61.8% retracement level. We can then sell after price ensures a bearish close of candlestick below the 50% or 61.8% Fibonacci retracement level. We can see this trading concept is simple and easy to apply. Just remember, the more you navigate to the higher time frame, the more powerful and reliable this trading strategy becomes. Also, do not try to trade with this trading indicator in a ranging market. We can now proceed to my 100 times back-tested trades based on this trading strategy concept. Here's the result I got after I backtested this trading concept 100 times on the 15-minute time frame of the USD Japanese yen. I implemented the 1 to 1.5 ratio. That was on 100 trades for 5 days. I got 60 wins and 40 losses. Most wins in a row is 6. Most losses in a row is 4. Gain on the account is 30%. Here's a good trading record. Remember, this trading strategy works best for the continuation of a trend. Therefore, avoid using it to trade against the Dominion trend. Looking forward to seeing you in the next video. Peace!